Hello everyone. So in the previous class, we have discussed with relating to the contra vouchers. Okay. So today we will discuss with the payment vouchers. So how the transaction is going to be done with the payment voucher. So contra voucher entirely speaks with the configuration effort. Okay. Do not forget contra voucher always speaks with the configuration of F4. If you just click on to a F4 features into the Tally ERP9, you can directly go for a contra voucher transactions. So what is contra voucher, which we have discussed? Any kind of bank to bank transaction or any kind of cash to bank transaction or bank to cash transaction is being applied in the contra vouchers. Okay. And now we will discuss with the payment vouchers. Okay. So here the payment voucher speaks with the F5. Okay. The payment voucher speaks with the F5 configuration. And what actually this payment voucher speaks about? Whatever the payment that the customer is made or whatever the payment that the supplier is made towards any kind of purchasing of fixed assets or any kind of purchasing of shares or any kinds of purchasing or payment of any duties and taxes. So out of any inflow or outflow of cash. So payment usually includes the outflow of cash. Okay. So that item will be recorded under the payment vouchers. So all the payments either in the form of cash or the bank should be recorded in this voucher. Okay, whatever the information that is proceeding with the cash or the bank, both the item will appear in the case of debit and the credit item. So in this particular, debit comes first and next the credit. Okay, in the previous contra vouchers which we have discussed, so we have recorded the credit item first and the debit item the next. In the case of payment voucher, debit comes first. Do not forget. So in the case of payment voucher, that is F5 features, which comes first, the debit comes first and next with the credit voucher. Okay. So now how the syntax goes on. So debit expenses, or it may be any kind of purchases of fixed assets, or it may be any kind of purchases of shares or the duties and the taxes. Okay. So sundry debtors and any payment with proceeding to these activity will be considered as a payment vouchers. So payment voucher speaks with the configuration F5. So any cash or the bank transactions will be the item. The money is moving out either in the form of cash or through a bank. So that will be recorded here. So what are the main transactions which will be recorded in the voucher? So very important, and these are the examples which is main important for your examination point of view also. Okay. So one is payment of expenses. So which are the expenses? It can be any expenses paid, or it can be any commission paid, or it can be any rent paid, or it can be any salaries paid. So that comes as the payment of the expenses. So what will be the transactions? Suppose if any rent paid, so rent accounts get onto cash account. Rent is a real account. So debit what comes in, credit what goes out. So purchase of fixed assets, purchases accounts data to cash or the bank account. So purchase of shares and payment of taxes by the cash and all types of bills cleared to the customers and the suppliers. Okay. So the what is the procedure for moving with the payment voucher? Go for a gateway of Tally. So GWT stands for gateway of Tally. Okay. So the transactions will be entered. First of all, when you go for voucher entry transaction, make sure that you are proceeding with the ledger entries first. Until unless you process with the ledger entry, accounting voucher is not going to accept the transaction. So which we have already discussed. It shows the pop-up message as spelling error. Okay. So accounting voucher and the click on F5 features, it automatically redirect you to the payment voucher. So step number 1 is F2, date will be appeared, F12 configuration. Step 2 is entry will be passed, and the step 3 narration as well as the output, that is accepting yes or no, will be generated. So we shall discuss the first one, the which is the first illustrations under the payment voucher, but the sixth illustrations considering from the contra voucher entry. Okay, 1 to 5 we have discussed in terms of the contra vouchers. So 6 to 10 we will discuss in terms of the payment voucher, and remaining we will also discuss with the receipt voucher and the journal voucher and the credit note voucher. So we will discuss with the one by one. Later we'll comprise with one and together we will learn to the 14 full-fledged problem. Okay. So what is the first transaction? Be very careful. Paid rent rupees 20,000. Commission rupees 3,000 by cash for Jayanagar Center. Okay. So what is being paid here? Rent as well as the commission is paid. So rent and commission is paid. So it is a nominal account rule should be applied. So debit all expenses and losses, credit all incomes and gains. Okay. So debit rent paid accounts, commission paid. So credit will be the cash is moving out. Okay. Credit what goes out. So you can't directly stick on to one rule here. You can apply the real account and the nominal account rule also. Okay. So ledger to be prepared is rent paid account. So very careful, ledger, which is a ledger in terms of the name that you will be preparing, it is the rent. Okay. So rent paid. So it is a group under indirect expenses. So commission account is also a indirect expenses. So cash account being rent and commission paid. So accept S. So this is how the screen pop-up message is going to arrive. So we shall also learn with the concept. Okay. So go for Tally software. Okay. Okay. The company is already created by you in the previous session. So we will prepare the accounts info. That is, we'll go for a ledger. Okay. So click on a ledger, create. So what was the transaction? Paid rent and commission of rupees so and so. Okay. So which falls under the indirect expenses. So both is a indirect expense. Create a ledger. So name should be prepared as rent paid account. So rent paid is a indirect expenses. So click on indirect expenses. So not applicable. If at all you need, you can give an information. Okay. So what is the value? That you need to forecast is so 20,000 and the commission is 3,000. So together it is 23,000. You can share it. So here, so rent paid is 20,000. Just record the information as 20,000. Okay. Yes. Yes. Okay. Fine. Now, there is also commission paid. Okay. So commission is also being paid. Just click on commission account. So commission also falls under the indirect expenses, not applicable. So what is the value that the commission paid is 3,000. So 3,000 will be the value. Debit S. Okay. You have created the one ledger. So now go for with you supposed to create a accounting. Now go for accounting voucher. Double click. You need the payment. So again click on the F5. It arises like this. Okay. So what is the okay. He was moving on for the accounting voucher. So we were supposed to prepare the payment voucher. So what is the type of account? It is a cash account that we are preparing. Okay, so cash will be the Okay. So what is the transaction? Rent paid account that we have already rent paid account. See, the entry is going to appear here. Okay, and one more is commission account. We have also prepared commission account. So what is the transaction here? Being rent and commission paid. Okay, so no entries in voucher. So we have in the previous session press enter. Okay, so the cash is also need to be prepared. So we have not yet prepared the cash account. Even that is more important. The cash account, prepare a cash account once again and then prepare a ledger entries with the transaction. So accounts info, groups, create a single group. No, we don't want a group. We want a ledger. Okay. So cash was the main reason here. Bank accounts. So you don't want to give any type of information, just click on to it. Karnataka. So give around 90,000. Okay. Now go ahead with the transaction in the case of accounting vouchers. So think that the rent and the commission is paid in the form of the in through the bank. Okay. So just give the bank account. So now rent paid account along with the commission account. Commission account. Commission account will be the transaction. So the 3,000 will be the value. Okay. The entry is created. This is how the generation of the entry moves on. Okay. So here the rent paid, commission and the cash will be the transaction. Now purchased furniture. Now there is the seventh illustrations. Purchased furniture worth rupees 30,000 at rupees 28,000 by cash. Okay. So 28,000 is been received by the cash, but the furniture purchase is 30,000. So what will be the difference? 2,000 is the discount which is being allowed. Okay. Or a discount received by the customer. So ledger to be prepared. What is the ledger? Furniture's account. So which is indicating the as a furniture, it is a group falls under the fixed asset. Then the discount received. So discount received is an indirect income. Where do you record the discount received? It is an item of profit and revenue in nature. So which are the revenue in nature will be recorded? It will be recorded in the profit and loss account. So debit furniture's account, credit will be the discount received account, credit will be the cash account. This is how the generations will be done in the. Make sure that before making any type of voucher entry, you have already created the ledger account and the grouping is done. Until unless the ledger and the grouping is done, voucher is impossible. Okay. So debit, furniture, credit and the tally software. Here in the beginning, it is going to give the credit information. Then it is appears with the debit information. Okay. So now purchased computer worth rupees 30,000 by SBI and shares in Wipro rupees 10,000 by cash. So what is the ledger? Purchased computer. So computer is a fixed asset. So the ledger to be created is computer account. The group that is going to fall is a fixed asset. By SBI and shares in Wipro. So shares in Wipro is an investment, any kind of shares or any kind of investment to be made which falls under the group investment. So debit will be the computer's account. Debit again will be the shares in Wipro. The credit will be the SBI along with the cash transactions. So the entry goes on like this. So debit the computer, debit shares in Wipro, credit SBI, credit will be the cash. Okay. So now quickly move on to the ninth one. Paid advance of rupees 5,000 for AB traders by cash. Paid advance of rupees 5,000 for AB traders. Who is the receiver? AB traders are the receiver. So debit the receiver, credit the giver. What is moving out? The cash is going out. So debit the AB traders, credit the cash. So in the case of payment voucher, debit and the credit is going to appear. But in the contra voucher, credit and the debit item is going to appear. Okay. So the generation of the entry will be like this. Debit AB traders. Debit the AB traders. Credit will be the cash. Okay. So this is how the generations of the entry can be done. Next, paid advances is done. And the next one is paid advertising expenses for 20,000. The expenses are allotted as follows. Banners, holdings, newspapers. So first, here see, look at it very carefully. First of all, create a cost category here. So what is a cost category here? The advertisement is the cost category. Okay. Create a cost center. Where do you see this option? The cost category and the cost center. It is applicable in the case of the F11 features. Okay. So to activate that, you have to go for the gateway of tally. Again, F11 features, accounting features, then activate. So here there is a information. Maintain cost centers, yes. Again, use the cost centers, yes. If this option is not available, you cannot create this sub-headings like the holdings or the news or the pamphlets will not be created. So what is the entry? Paid advertising expenses. So debit the advertising expenses. It is moving through a cash in terms of cash. So being advertising expenses paid. Okay. So accept the information. This is how the screen is going to be appear. Payment. So payment is number 5, that is F5 features. Debit advertising expenses, credit will be the cash. Accept yes or no. Clear? Now. So quickly moving on to the receipt voucher. So receipt voucher speaks entirely with the F6 configuration. Okay. So whatever the receivables, either in the form of cash, either in the form of bank, which will be recorded in this particular voucher. So how the syntax goes on? It may be a credit and a debit. Here it is a credit and a debit. The main transactions, whatever the information that is received will be the receipt voucher. So types of bill, new reference bill, against bill, on account bill and advance bill will be prepared. So what is the procedure? Go to gateway of tally. Transactions will be recorded, accounting voucher, receipt voucher. So step 1, this is how you need to elaborate with your points in the examination point of view. Okay. F2 date, F12 configuration. Again, step 2 is pass the entry. Step 3 is giving the narration. Step 4 is output, that is accepting yes or no. So we'll move on to the first illustration. Mr. Calvin started a business. So the material is already been shared for you. So just go through this video, okay, along with that material which is being shared and compare this and study. Okay, further it is going to be very helpful for you. So compare the video along with the material. So compare it and work out on the illustrations which we are discussing now. Fine. Mr. Calvin started a business with a cash of rupees 75,000. So business has been started. So any business will be started is it is going to be invested with what? It is going to invest with a capital. So what will be the entry? Capital. So that will be the credit entry. So cash. Cash is account, usual the normal entry which we prepare, that is the cash account data to capital account. So the cash is introduced to the business. Fine. So here in terms of this, credit will be the capital, debit will be the cash account. Okay. So the entry goes on like this. Here also you need to prepare a ledger account in the terms of capital, in the terms of cash, then proceed with the transaction. Here now. Sold furniture worth rupees 20,000 at the rate of 17,000 by ICICI Bank. So what is the ledger to be prepared? The ledger to be prepared is furniture's account. So furniture account is a fixed asset. So see, sold furniture worth rupees 20,000 at the rate of 17,000. So the value is reduced from 20,000 to 70,000. So which is indicating what? Which is indicating loss on sale of machinery. So any loss is a indirect expenses. Any profit is a indirect incomes. So here it is a loss on the furniture. It is an indirect expenses. So through what it is transaction is going on. The transaction is moving on with the ICICI Bank. So ICICI Bank falls under the group bank accounts. So credit will be the furniture's account. Debit will be the loss on furniture. Debit will be the ICICI Bank. Now again read the question. Sold furniture. So what is the normal transaction for sale of any fixed assets we are going to record? Cash account data to sales account. So here the transaction is moving on with the ICICI Bank. So ICICI Bank account, loss on sale of furniture account data to furniture account was the usual entry. But here in the kind of voucher, so credit will be the furniture, debit will be the loss of furniture, debit will be the ICICI Bank. Okay. So the transaction moves on with the receipt voucher. Receipt voucher speaks with the F7 features. I mean F6 features, sorry. That is number 7 that we are recording. Okay, so we are in the F6 features now. Now, received rent and commission equally from Jayanagar cost centers. So rent received and the commission received. So debit will be the cash. I don't want again stress on with the same points. So debit and the transaction will be done. Received advance from ABC Company Limited. Who is the giver and who is the receiver here? Advance from ABC Company. ABC Company is the giver. Credit the giver, debit the receiver. So cash is coming into a business. Contra voucher. See, here you can also do a transaction with the contra. Cash account data to ICICI Bank. Both the transactions will be recorded. See, receipt entry is also passed and the contra is also passed. Because there is a bank to bank and a cash to bank transaction there. Now, so this is about the journal voucher. So journal voucher speaks with the F7 feature. Okay. So what actually this journal voucher is? Journals are certain advertisement entries which do not involve cash account and bank accounts like the provision for liabilities, depreciation, etc. So, for example, any bad debts written off or any depreciation of fixed assets will be recorded in the case of journal voucher. So any kind of depreciation provided or any kind of goodwill written off or any kind of bad debts written off will be entered under the journal voucher, that is F7 configuration. So it should not include the cash, bank purchases and the sales. So debit any ledger, credit any ledger. So what are the main transactions? Any depreciation or any appreciation, any transfer or any bills of exchange will be recorded here. So how the procedure goes on? You may get the question in the 2 marks. Okay. So what are the write any 2 examples for journal voucher? So be very particular. Okay. So procedure is gateway of tally, go for a transaction, accounting voucher, journal voucher. Step 1 is moving on to F2 date, F12 configuration, step 2 is pass the entry, step 3 is give the narration, and step 4 is save it. So appreciation of land and building at 5% whose books value is rupees 5 lakh. So the ledger to be prepared is land and building account. So appreciation is made. So debit will be the land and building, credit will be the appreciation account, being land and building value appreciate. So the entry goes on like this, appreciation account. So which will be passed on the journal voucher, that is F7 configuration. Clear? Now, depreciation. So appreciation will be the credit. So depreciation will be the debit. So debit depreciation, credit will be the furniture. Now, transfer of cash of rupees 10,000 from Sham capital account to Ram's capital account. So Ram's capital account to Sham's capital account. There is a transaction transfer between capital to capital. So debit, who is the receiver? Ram capital is a receiver. Credit the giver. So Sham capital is the giver. The entry goes on like this, debit and the credit. So this is what with the sales vouchers, okay? So which are the vouchers that we have discussed already? Contra voucher speaks with the purely with the F4 configuration. Payment voucher is F5. Journal voucher is the F7. Receipt voucher is the F6. Now we'll move on with the sales voucher, that is F8 configuration. So what is sales voucher? Any sales or any value that is being sold to a customer in terms of a sundry debtors will be recorded in the sales vouchers. For example, sold goods for cash rupees 12,000. So cash goods is being sold for what? For cash. So what is that? What is coming in and what is going out? The goods is going out. So what will be the transaction? Cash account attached to sales account. Okay. So the ledger to be prepared is sales. So sales falls under the group sales account. So debit the cash, credit the sales. This is how the entry goes on with the Tally ERP9. Clear? Next. Sold goods to Mr. X for cash rupees 8,000. Sold goods to Mr. X. The name is mentioned here. So whenever there is a name mentioned, so just write the name itself. Whenever there is no name, write the cash. So Mr. X account attached to sales account. Here the transaction goes on with this. Next with the purchase voucher. Purchase voucher speaks with the F9 configuration or any item that has been supplied from the sundry debtors or any item purchased from the suppliers will be entered in the purchase voucher. So we shall see the entry purchased goods for cash rupees 2,500. So what is the ledger to be prepared? Purchases, so which falls under the purchases account. So credit the cash, debit the purchase. Entry goes on like this. Then purchased goods from Mr. B on credit rupees 5,000. So on credit. So the name is mentioned. So what has been done? There's a purchases. So Mr. B's account. So purchases account attached to Mr. B is a normal transaction in the books of accounts. But here in terms of the Tally software, so Mr. B will be the credit, purchases will be the debit. So being goods purchased on credit. Clear? So we shall see credit note voucher, debit note voucher, reversing journal voucher. So which is the only a few companies going to select these kind of voucher. Okay. Memo voucher. And also we shall see certain voucher creation transactions and the entry transactions. Okay. So here, okay, listen and practice until the purchase voucher F9 features. Okay. So we don't want to discuss in a full-fledged with only the same video. So we will discuss with the next videos of credit note voucher and the debit note voucher, revising journal voucher, memo voucher in the next case. Okay, because there is plenty to be discussed here. So for that reason. Okay. Thank you. So moreover is practice is important because in the Tally software.